I was speaking about Apple yesterday, and some people got very butthurt. Very butthurt. Oh, Jeremy, you're being mean to Apple. You're supposed to only talk about the positives. Don't talk about the negatives in regards to any stocks, and especially a stock I own. And a lot of people are very butthurt, and they're going to cancel me for speaking about the ways Apple's mismanaged their business over the past few years, right? At the end of the day, if you're a stock in the market, I'm going to criticize you when you make bad decisions, okay? And Apple's made plenty of bad decisions over the past few years, and I've been very critical of them, right? And so I do that for all my stocks that I hold. I've been critical of Elon Musk several times. I've been critical of Tesla. I've been critical of I've been critical of myself even in the past several times on the channel when I've made big mistakes and said, I need to do better, I screwed up, like here's what I did, here's what I need to get back to. Like, I have no problem with that, right? But other people have a lot of problem with that, okay? In regards to Apple, here's what you're dealing with. You're dealing with a mismanaged company. This company, on a 2-year stack basis, the revenues went down. Look at March 2022, $97 billion of revenue, and you're doing $90 billion in this latest quarter. Now, the excuse will be, well, consumer inflation. Baloney. Look at all their peers, right? All the other trillion-dollar boys club, right? All those companies have seen their revenues go up substantially over the last couple of years. Apple's the one that's gone down substantially by roughly $7 billion. You flip my flapjacks. Gross profit has also gone down on a 2-year basis for this company. That's a mismanaged company. But it gets far worse. Their first product they've ever released, their first major hardware product they've ever released without Steve Jobs and without Johnny Ive, flopped. It's a flop. Could you ever imagine Steve Jobs coming out and announcing a flop project? Like, come on, where they got to cut production? Apple had to cut production because it's selling so poorly. There's such low level of demand interest in regards to their new hardware project. And this is where I wish, this is a problem with social media at times. The news cycle moves so fast that no one has any time to really analyze anything. If this was the old days before social media and before everything moves so fast and people get over stuff and it's next TikTok video and the next Instagram video, there would have been so much debate and talk about how Apple's first product without Johnny Ive and without Steve Jobs is a complete flop. But since the news cycle moves so fast, no one talks about it, right? And if anybody talks about Apple, it's like, wow, did you see that big share buyback? I mean, Tim Cook, he's just taking all the profits that are Steve Jobs' profits that he built his business with and using those profits to go buy back shares. That's not running a business on a high level, right? And even with all those buybacks, right? And even with that great stock performance of the past 2 days, this is the bum stock of big tech. If you compare them versus all their peers, the other trillion-dollar plus companies, they're the bum company. This is since all these stocks bottomed back in the fourth quarter of 2022. Apple's at a 55% gain, while the Nasdaq's at 77%. It's getting wrecked by the Nasdaq. Like this was something that shouldn't even been thought as possible before. And this is after the crazy performance over the past 2 trading days, right? Microsoft's at a 94% gain since that time. Google McDougal's at 102% gain over that time. Amazon is at 113%. Meta's at nearly 400% gain over that time. And Nvidia's at nearly 800% gain over that time. And this is a company with unlimited amount of resources. They've spent like $700 billion on share buybacks in the past 10 plus years. So what do we have to show for it? An underperforming stock, an underperforming business that the financials have gotten far worse over the last couple of years. In their first major product they've launched since Johnny Ive and Steve Jobs, like that doesn't have either of their inputs, it's a flop. It's a flop, man. That's embarrassing. And so at the end of the day, when I'm critical of Apple or I'm critical of any stock, it's because I've been doing this a damn long time. And I made a lot of money off Apple stock back in the day. I made a lot of money off of semiconductor companies I owned that did huge business with Apple. I understand that business on the highest level possible, all the way down to exactly how the phones actually work. And when I'm here to tell you a company's underperforming, it's because they're underperforming. And so don't think it's of it as hate or anything like that. It's just calling it out how I see it. And you can't debate the numbers. The numbers are pathetic. And so that's it's not like I'm doing it just to hate on these guys. I'm doing it because there's reasons that I'm seeing a company completely mismanaged here, and a lot of people aren't waking up to that. But I will say, enough people are waking up to it, right? Now, a few things here. First up, okay, and this is regards to don't be a pew-pew, okay? First thing, you need to thank people when they point out weaknesses of your stocks, whether that's in actual weakness or not. SWOT analysis is one of the most important things you can ever do when analyzing a company, right? looking at the strengths, weaknesses, the opportunities, and the threats for a particular company. So when somebody's pointing out weaknesses, thank them for doing that, because that's the most valuable thing you could ever have, right? Remember the second thing here. Stocks are about what? It's about risk reward. If you go to say, I'm going to put $50,000 into a stock, $20,000, $100,000, $1 million, $20 million, whatever amount it is, it's about what are the chances I'm going to lose 50% plus in the stock over the coming years versus what are the chances I'm going to double up my money over the next many years, right? That's what it comes down to. It's the risk versus a reward. So whenever somebody's pointing out the problems with the company, thank them for that. They might give you some details there and some insight that you didn't really consider, and you need to consider those things, right? And the third thing is confidence, right? So many people don't want to hear anything bearish about their stock or anything like that. You're going to build a lot of confidence in your decision making by looking through the window. A lot of people don't even want to look through the window. They're scared of it. Oh, I can't even look through the window. Look through the window. You'll build more confidence in your position. If you walk away hearing a bearish argument, somebody destroy a stock that you own, and you walk away from that feeling great and feeling that, those aren't really issues I see for this company, great. You just built even more confidence because you were willing to hear the other side, right? The problem is when people aren't willing to hear the other side. You've got to look at all those. Whenever I look at any stock I'm buying into, I look at what are the competitors doing? What are the chances this company, maybe the bears are right in regards to this, right? It doesn't matter what stock, it could be PayPal. I think about, Apple Pay. I think about Cash App. I think about all these different dynamics. Okay, here's the risk, right? If it's a Nike, I think about all the different risk factors. Did that with Meta over the years, Tesla, all these stocks. You got to be willing to at least hear it, okay? That will build you stronger. That will build more confidence in yourself and your decision making. If you're not willing to look through the window, you're lost in this game, okay? So very, very important, don't be a pew-pew, okay? Yeah, you're part of the problem if you're a pew-pew. Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Let's talk little Big Short. Big Short. Steve
on the infrastructure trade and thinks there's one big hidden AI play. Joining us right now is Steve Eisman. He is Senior Portfolio Manager at Neuberger Berman. And Steve, you're not just bullish about the infrastructure play. You're bullish about the markets writ large at this point, I think.
Wow. That's true. I am.
So what do you see that you love?
Dang, he stuck his head out. I mean, that right there in itself is just sticking your head out. I mean, the fact that she's like, you're bullish on the markets in general, and he's like, I am. Like, okay, wow.
He is Senior Portfolio Manager at Neuberger Berman. And Steve, you're not just bullish about the infrastructure play. You're bullish about the markets writ large at this point, I think.
That's true. I am.
So what do you see that you love, or I guess it's the absence of anything you don't love?
Well, what I would say is that in bad times, people focus on credit quality and balance sheets, and in good times, they focus on stories. And we're in story time. And there are two extremely dominant stories in the markets today, and that's AI and infrastructure. And that's what's driving the economy. And, all the economists who have said that because the Fed's raised rates 500 basis points was going to cause a recession have been wrong. And we're just powering through. And I think the only conclusion you can reach is that the U.S. economy is more dynamic than it's ever been in its history. So what's not to be lucky about or happy about?
That explains the momentum. We keep setting new records every day, it seems like.
Yes, I mean, what I would say is, like I had a theory a few months ago that the hidden AI play was Apple. And that seems to become consensus like in the last week.
Yeah.
So it's no longer.
How did you know that before? Because there were so many questions about Apple and what it was doing. I mean, it's suddenly become
It's not the hidden AI play. No. Anybody that thinks that's straight delusional. No.
Clear that they're going to be a distribution.
As somebody that knows this company as well or better than probably anybody out there, no, they're not the hidden AI play. And as somebody that's a diehard customer of theirs, no, it's not. It's not.
Yes, but the only thing that I know is that if AI is going to broaden out...
If you're playing Apple stock for AI, I got a bridge to sell you.
On just the cloud, people are going to use it on their phone. And so that means Apple. And it means that my phone that I bought a year ago is probably not going to be adequate. It's going to be obsolete.
Yeah.
So you're going to have the biggest refresh. So look, the next stage in the whole tech story is going to be people are going to buy new phones, they're going to buy new laptops, and that's going to have a tremendous trickle down into the rest of the tech sector.
So right now I have the 15
Me
Pro.
too.
I have the 15 Pro.
Right.
You're good to go, my friend. You actually don't need to upgrade this phone. If you have phones prior to this phone, you have to upgrade.
Yes.
And so the question is, what kind of upgrade cycle you think we're really on? Is this a multi-year upgrade cycle? Is it a finite one? Meaning, is it 2 or 3 years?
I have no idea. It's impossible to know at this point.
The economics are going to come as a result of the upgrade cycle. It is less clear to me that they're going to come necessarily from services revenue.
Look, we could say whatever we want at this point because it's impossible to know. I mean, I think it's going to be both. I think people are going to upgrade. I'll certainly get a new iPad. My iPad's a little low.
Right.
I'll get a new laptop because the last time I bought a laptop was probably 4 years ago. Maybe I'll keep my phone. Maybe I won't. And then there's all the services. I mean, it's impossible to say at this point what service is going to do because there aren't any apps yet that you're going to say you're going to pay for the services. So it's all pie in the sky at this point.
If you think Apple is the secret play, but you think it's
not so secret anymore.
Yeah, not so secret. Are you looking downstream? You say that.
We're starting to do research downstream about everybody else that's going to benefit, and hey, I'm not going to tell you what companies those are because I haven't bought them yet.
Just wait until they find out about this one company. You know what company it is? Palantir. Wait till they freaking find out about Palantir. Holy smokes. These guys are sold on Apple being an AI play? Come on, baby. Wait till they do a little more research.
What we're working on right now.
Do you hold on to your Apple position? Do you think that this
definitely hold on to your Apple position? It's too central a figure in the whole story. That's going to come.
How do you think about a Microsoft?
Oh, we've owned it for years. Same story. Central figure, but it's Microsoft is not going to be. I mean, it'll be like Apple in terms of you have to figure out who else is going to benefit from all the stuff that Microsoft is doing, but that has to be a core holding.
And what about Google?
Same. I mean, there are two groups. The groups, there's Microsoft, there's Apple, but then there are the people like Oracle, Google, Meta that have tremendous databases that are going to be used. And then there's going to be all the companies that'll benefit from the broadening out. The big question that I have, and I don't know the answer to this, is there's a thesis out there which I find interesting. I don't know if I completely agree with it yet, that for years software outperformed hardware. Mm-hmm. And I think there's an argument to be made that if AI is as successful as people think it's going to be, the cost of creating software is going to implode. Right. And so that would imply that the moats that some of these software companies have, not all, but some have around their businesses are not going to be quite as high. And so you can make an argument that the revaluation of hardware is going to continue and that some parts of software will derate. I think it's a kind of an interesting thesis. If it's true, it's a very long-term thesis, so there's plenty of time to figure.
Exactly.
But it's one of the more interesting.
Yeah, that's a super long-term, kind of thought process on what could happen in software companies. I think it's hard to predict right now. But, to me, I think Meta is one of the most interesting, and obviously I'm talking about my number one position. It's one of the most direct, easy plays on AI out there that trades at a far cheaper valuation than Apple and has way better growth than Apple, right? Which is why Meta is going to likely still continue to outperform Apple stock considerably over the coming years. And so when it comes to Meta and benefiting from AI, there's really like three ways they're benefiting massively from AI right now and over the coming years. One is through basically the recommendation engines whenever you go onto Facebook, Instagram, and you go in and, on there, is it giving you content that makes you say, oh, this is enjoyable, you spend more time on the app, right? And then you go share those videos out with other friends that bring them onto the app and things like that, right? And so it's very important that time spent on apps is very important. Why is that very important? Well, the more time you spend, let's say, for instance, you spend 5 minutes on Instagram or Facebook versus spending, 50 minutes on. Well, that's 10 times more ads they probably got to show to you during that time period, right? So therefore, it's a lot more valuable. It helps out ARPU in the end, right? And so time spent on app is definitely very important. So that's one way. Second way it's really helping Meta significantly is for advertisers. In serving up those ads, whether it be in stories or whether it be in the feed, right? Serving up those ads to people when they're ready to see those ads that are most relevant to them. And so, there's a spray and pray approach in regards to advertising where you're just flooding the money out there, or very targeted, very specific to this person. And then the AI recommendations, basically feeding those ads to the customer that's most likely to be interested in that particular product or service. So that's another way it's helping. And then the last is obviously through the Llama model, and that's more of a longer term. So if you think about what's making a financial difference today, tomorrow, and next year, it's really about the first two I just covered. If you're thinking about what could be a game changer for Meta 5-10 years from now, it's the Llama models, right? And they're on to Llama 3 now at this point in time, and that seems to be building out very successfully. And that's going to be, that has the potential to be a very massive hidden play, kind of like AWS was for Amazon, many years ago. So just a little food for thought. So that's the three core ways that Meta is really benefiting, and you're already gonna be seeing it in the numbers now, and you're gonna see a lot more of it in future years, right? And once again, you're getting at a cheaper valuation than an Apple. That is why Meta's gonna continue to outperform. I mean, Meta's destroyed Apple stock the last couple of years, and it's gonna continue to destroy that stock. I don't know why anybody in their right mind would want to play Apple over Meta. It's absurd. Plus, did you know what Apple has going for it right now also? Several major antitrust lawsuits now at this point in time. More states are jumping in on that. So I think the ramifications from the government side, they're really coming down on Apple. And if they at all disrupt that services business, if they say Google can't pay Apple the tens of billions of dollars they do a year, I mean, that's going to completely ruin Apple in the short term in terms of their profitability, right? If they do anything to damage that services business, right? And so that's just all food for thought in regards to that. Meta already went through all their crap. They already got through all that. They already had all the government agencies looking at them for years. So they already got past that moment. Apple's just really going through that moment. I don't think enough people are taking that serious because that can be a huge holdback of the stock for years. Believe me, it held back Meta for years.
That I've heard in a long time.
Steve, we have former President Trump, meeting with the Business Roundtable in Washington, D.C. today. You have come up with this idea that his reelection is
a certainty.
Inevitable at this point. Why is that, and what does that mean for the market?
Wow. He says it's a certainty T-Man's going to be reelected. That's interesting. That's another stick your head out there. He believes, wow.
My thesis is that the protesters on the college campuses are rapidly becoming, unfortunately, the face of the Democratic Party, although that's not 100% true yet. but that what's going to happen is in August at the Democratic Convention, which is in Chicago, ironically, given what happened in 68.
Yeah, 68, right.
They will convene there, and they won't be able to help themselves, and they will burn Israeli flags, and they will burn American flags, and they'll shout things like death to Israel and death to America or some variation of that. And the whole country's going to watch, and the whole country's going to be appalled. And at that point, the election will be over. It's not going to matter what anybody else says. That will be done.
So what does that in turn mean for the markets, if that's your thesis?
I don't think it means a thing.
So first off, he's definitely emotionally wrapped up in that situation. I could just tell the way he's speaking. If you know anything about Steve Eisman's background and his religious views and those sorts of things, you'll understand he's definitely emotionally wrapped up in that. We'll speak about this a little deeper in just a second.
I actually don't really think it matters that much for the overall market who's president. It'll matter for certain subsectors. Probably some old energy stocks will do better. There'll be other things that might do better. But for the overall economy, I don't think it matters much at all.
In terms of stock market, it does actually significantly matter who wins this election, in my opinion, whether it's T-Man or it's B-Man. And the reason being is B-Man wants to go up on corporate tax rates from 21 to 28%. That's taken away 7 percentage points of profits from these companies, right? It's not a small number. It's a substantial number. T-Man, from my understanding, T-Man has no interest in doing that, right? So if T-Man's elected, it basically takes that boogeyman out of the market. If B-Man gets reelected, it basically keeps that boogeyman in the market, and everybody's saying, "Ooh boy, our corporate tax rate's about to go up." Because in theory, you would say if all of a sudden corporate tax rates, let's say today, corporate tax rate's 7% higher, right? 7 percentage points. Okay, the market should go 7 percentage points lower. It should. Like the S&P 500 the very next day should go 7 percentage points lower, right? So it's not like it's a minuscule amount. It's very substantial. And then remember, it's not just that it's 1 year of, taxes going higher. It's year after year after year, you lose that 7% that you could be using on share buybacks, dividends, adding more cash to your balance sheet. Instead, that money's funneling to the government, right? So 100% it matters significantly. And there's a few other smaller policy things that I think matter between T-Man and B-Man for the actual, stock market in itself. But I think that's the biggest one, in my personal opinion, out of everything.